We're here at the Cloud Hill Quarry, one of the group's largest limestone quarries in the central region of the UK. And I'm here with Rob Wood, CEO, and James Brotherton, CFO, to talk about the 2022 full year results. Rob, James, good morning to you both.
Morning.
Good morning.
Rob, if I can start with you, it's been another record year for the group, increasing earnings and increasing returns whilst maintaining a strong balance sheet. What for you would you pick out as being the main features of these results?
Yes, you're right. We've delivered another record year, successfully navigating numerous challenges to deliver results ahead of expectations. This performance is a testament to our people, their quality and integrity, and their resilience and dedication, irrespective of the challenges they've faced. I'm immensely proud of what they've achieved, and I thank them all wholeheartedly. Our key construction markets continued to benefit during the year from long-term structural growth drivers. Our dynamic pricing strategy, along with our forward hedging program and cost management, ensured we recovered costs. And lastly, we continued to invest in growth. Our numbers matter, but I'm particularly delighted to report the progress we've made this year in respect of our three strategic priorities: sustain, optimise and expand. This progress ranges from the work we are doing in our cement business on decarbonising it, through to safely improving efficiencies in our quarries, and to growing through M&A and organic investment. In summary, it's been a great year.
And so, turning to you, James, the group once again has increased its dividends this year after introducing them last year. What would you pick out as being the other sort of main financial highlights of this year?
I think it starts with the top line. We've grown our revenue by 13% or 11% on a like-for-like basis. And pleasingly, that revenue has dropped through to the bottom line. We've grown our EBIT by 16%, increasing it by some 30 basis points. If we turn to the balance sheet, we've deleveraged still further to 0.7 times leverage. Our free cash flow generation was slightly lower this year at 29% of EBITDA, but that's a reflection of the investment that we've made back into the business over the course of the last 12 months. We have increased our dividend. We've paid out over £30 million in cash returns to shareholders over the course of 2022. And perhaps most pleasing of all, we've grown our return on invested capital by 130 basis points to 10.8%, significantly ahead of our target of 10% and well ahead of schedule.
Breedon's been quoted on the AIM market in some form or other since 2008, but you've announced the intention in these results to move up to a premium listing on the main market. Why have you chosen to do that, and why now?
The AIM market served us really well since 2008. If you go back to when the bulk of the Breedon assets were acquired, we had 180 million tonnes of reserves and resources, we had 29 quarries. We're now a business with over 1 billion tonnes of reserves and resources and over 300 sites across both GB and Ireland. We feel that now is the right time for us to make that move up to the main market. The AIM community has served us really well in terms of supporting us with equity issuance over the years, and we thank them very much for their support over that time, and we look forward to our future on the main market.
And so, Rob, coming back to you, this theme of the maturing of the Breedon Group is something that you've talked about since taking over in 2021. And Breedon's proven to be pretty resilient through a range of different conditions over the last few years. But we do hear a lot about the uncertainties that are out there at the moment from an economic perspective. Going into 2023, how do you feel about the outlook for the group?
We recognise the macro level uncertainty and the backdrop out there, but we remain confident. In the UK, the latest estimates are for only a shallow recession in 2023, but our end use is well exposed to construction markets where there is still expected to be growth, and the government are still committed to infrastructure spending. In Ireland, growth is expected in 2023, and like the UK, the government is also committed to infrastructure spending. Lastly, we've started 2023 positively. Whatever materialises, the Breedon model and the people who operate it have consistently demonstrated resilience and delivered strong performances irrespective of the macroeconomic backdrop, and I am confident in our ability to continue to deliver.
Well, Rob, James, thank you both very much for your time today.
Thank you.
Thank you.